I think we think of this as going two different ways, depending on how you want to look at it. Half glass full or half glass empty approach. I think you just had glass half full approach to this. Big opportunity for Qorvo if they ramp up and get more efficient with the manufacturing. But the glass half empty outlook for this is maybe Qorvo just needs to admit that its expenses are way out of alignment with where they're presently at.
On this episode, we're going to talk about the company Qorvo, ticker QRVO. We'll throw up the semiconductor industry flowchart and show you where this company falls in the industry. It is an integrated device manufacturer. This company was the result of a merger in 2015 of RF Micro Devices and Triquint Semiconductor. The company has three major segments: High Performance Analog or HPA, Connectivity and Sensors Group, CSG, and Advanced Cellular Group, ACG. The company manufactures chips, especially in the mature node space for the automotive industry, aerospace, and internet and infrastructure.
So we think Qorvo is worth talking about because we talk a lot about Broadcom, we talk a lot about Qualcomm. We told you a couple months ago that we exited a long-time position in Skyworks Solutions. What do all these companies have in common? They make connectivity chips. Yes, that's right. Broadcom and Qualcomm are not fabless semiconductor companies. They are also IDMs. They manufacture some of their connectivity chips. And Qorvo is a big competitor here. They, of course, make things other than connectivity chips and are continuing to try to diversify out of this space. We're going to talk about this a bit today because connectivity chips have become sort of a commodity, I guess you could say, a very sticky commodity, because Apple was not able to eliminate Broadcom and Qualcomm from its supplier list, but nevertheless a commodity. Lots of companies play in this market. And so if you're looking at a rebound in the smartphone industry at some point in 2024, Qorvo may come up on your list as a cheap stock that you might want to invest in. So I think we need to talk about this, Kasey, because there's a lot of these companies that fall into this category. We're at the bottom, potentially the bottom, it seems, of the smartphone cycle. Sales might start to heat up again in 2024. Is Qorvo a buy? Let's talk about the business. Let's do a deep dive because we have never talked about this one on this channel before.
Nick, I know that at the end of fiscal 2023, which ended in April for Qorvo, 37% of its revenue came from Apple. Now, why is this significant?
Yes, a lot of these smaller companies are really tied at the hip to Apple. Apple's a wonderful partner, but it's a double-edged sword. You're kind of stuck with Apple. And as we know, Apple always looking for ways to not just advance its technology for its iPhones and its MacBooks and so on and so forth. We have the Vision Pro coming out next year. In addition to advancing its technology, always looking for ways to save money in manufacturing its products as well. That's what has made Apple such a wonderful investment. It's what's made Warren Buffett a ton of money with his investment in Apple via Berkshire Hathaway. And it's a risk for these companies. It's a source of growth, but it's also a risk. It's why we ultimately exited Skyworks Solutions in favor of some other companies. Skyworks, 2/3 of its revenue tied to Apple. It's a huge number. Qorvo, obviously not that high, but 37%. Apple is a potential risk because Qorvo competes with Broadcom, with Qualcomm, with Skyworks Solutions. And so Apple, you can see how they kind of play these companies against each other to a certain extent to get best pricing for itself. So Qorvo, again, a top supplier of, in particular, RF radio frequency connectivity chips, Wi-Fi. They kind of do these combo chips where you get like the Wi-Fi and the radio frequency chip kind of in an all-in-one package. This is what Qorvo is primarily known for. So they're trying to diversify like a lot of these other businesses. Casey, let's talk about silicon carbide. What's going on with that? Because that buzzword is most definitely a thing at Qorvo. What's up?
Yes, Qorvo has diversified its business by acquiring United Silicon Carbide, which is a manufacturer of SiC semiconductors. Now, as we have talked about, SiC silicon carbide is a material that can handle high voltages and heat, making it ideal for use in electric vehicles and other next generation power chips. So Qorvo's acquisition of United SiC gives it access to this growing market. And then in 2022, Qorvo followed up with an SiC wafer supply agreement with South Korea's SK Siltron. This agreement will help Qorvo meet that demand for SiC semiconductors.
Right. So, in addition to maybe a potential smartphone rebound next year, maybe Qorvo pops up as a silicon carbide stock. Of note here, I think it's important to know you mentioned SK Siltron, sister company of SK Hynix, big South Korean conglomerate, SK Group. That's actually who's making the wafers for Qorvo. Qorvo is going to be involved, it seems like, with just the packaging of these silicon carbide devices, not actual wafer manufacturing, versus on semi, one of our IDM investments. They're looking to try to have the majority of their silicon carbide wafers done in house by the end of this year and also packaging, kind of in one vertically integrated next gen power chip company. Now, Casey, rather than rattle off all the chip types that Qorvo does besides connectivity and silicon carbide, you dug up the annual report, and in there you found the long list of competitors of Qorvo by business unit. Maybe before we continue with financial considerations here, what does Qorvo do and who do they compete against? That might be a better way to frame what the company does.
Okay, so in the high performance analog segment, they compete against Analog Devices, Infineon Technologies, NXP Semiconductors, onsemi, ST Microelectronics, Texas Instruments, and Wolfspeed. And then in connectivity and sensors, they compete with some of those previously mentioned businesses, plus Broadcom, Skyworks, Qualcomm, and Silicon Labs. And then in advanced cellular group, again, they compete with Broadcom, Qualcomm, and Skyworks, the other connectivity chip IDMs. In addition to these specific businesses that they listed, they said some of their largest end customers and leading platform partners also compete with us to some extent by designing and manufacturing their own products. Our competitors may also be able to design around our patents.
So that obviously means primarily probably Apple is who they're talking about. But this, I think, underscores the point. And one of our original theses for having this channel in the first place, we have tighter integration that's needed and that's beginning to really ramp up between hardware and software. So you have chip companies becoming software companies, and then you have big software companies becoming hardware companies. So Apple, of course, Google, a top designer of its own chips, Amazon designing its own chips. The list goes on and on. Some of these big customers of Qorvo also becoming competitors in some markets, in addition to the traditional fellow chip designers. So I think this underscores the fact that this space is fierce. And Qorvo is a smaller business in the connectivity and analog chip IDM, integrated device manufacturing market. So let's talk about the financials here, Casey, because I think this talks about the next big risk that you need to consider when looking at your options in connectivity chip bets.
So in Q1 fiscal 2024, on a GAAP basis, revenue was 651 million, gross margin 35.2%, operating loss 48 million, and loss per share was 44 cents. On a non-GAAP basis, gross margin was 42.9%, operating income was 47 million, and diluted earnings per share were 34 cents. Nick, can you explain some of the differences here between the GAAP and non-GAAP numbers?
Yeah, this is interesting, Casey. This is a little bit like Wolfspeed, who had been, up until recently, excluding some of its manufacturing costs from its adjustments. So here's the big thing that you need to know about Qorvo. It is an IDM, so it designs chips and it manufactures chips. You said GAAP gross margin was 35%, but almost 43% on an adjusted basis. They're excluding their underutilization costs for their manufacturing business. That's a no-no. Okay. Throw adjusted gross margin out the window. It's meaningless. It makes the business look like it's performing better than it is. Gross margin was 35% in Q1 fiscal 2024. And this is really horrific. In Q4 2023, that was the 3 months that ended on April 1st, 2023, gross margin was actually only 18%. So the operating loss was actually 189 million in the previous quarter. So a big rebound from quarter to quarter. You said operating loss was 48 million in the last quarter ended in July. But that's the difference here. The company is primarily excluding underutilization of its manufacturing lines. And this is a horrible, horrible underperformer when you compare it to some of its peers like Skyworks Solutions, like onsemi. We won't compare it to the really, really big companies like your Qualcomms, your Broadcoms, or your analog devices, and so on, because they have tremendous scale. But even companies that are kind of smaller players on this front, Qorvo has been lagging behind since that merger in 2015. This is not a great situation.
Nick, do you think the underutilized manufacturing facilities is the biggest issue for Qorvo?
Yeah, Casey, it's a tough situation. I think the reason the company merged in 2015 was to unlock synergies. This is why companies merge. You can list all these reasons why, but ultimately it's to try to get more efficient. And a company like this, in this era where chip making gets more and more expensive, designing chips gets more and more complex, having some efficiency in your manufacturing is key. It's essential. And that just hasn't transpired for Qorvo. It still looks like they have more manufacturing lines than they actually realistically need, even after a pretty sizable run up in revenue during the pandemic. So I think that's the biggest issue we have with Qorvo here is they have too much manufacturing, which leads to those lower gross margins versus its peers. Your typical IDM, you're looking at mid 40%, 50%, or higher gross profit margin. And that's kind of a sweet spot where you really want it to be able to say a company is being efficient with its use of manufacturing. And obviously, they're a long ways from that.
Despite some of these challenges that Qorvo has, let's discuss the outlook for the company and where we see this going forward. Now, China business currently is down 70% from its all-time highs. If China's economy does rebound, this could be a huge boost for Qorvo. The other thing is Qorvo really is in line for a massive profit margin expansion in the coming years if connectivity chip demand heats up from a rebound in smartphone and consumer electronic spending, as well as a ramp up in demand for those SiC chips, especially related to EVs or electric vehicles. Nick, what are some of the other things that could help?
Yeah, good points. And I think we think of this as going two different ways, depending on how you want to look at it: half glass full or half glass empty approach. I think you just had glass half full approach to this. Big opportunity for Qorvo if they ramp up and get more efficient with the manufacturing. But the glass half empty outlook for this is maybe Qorvo just needs to admit that its expenses are way out of alignment with where they're presently at. So this is one of the reasons we have highlighted for our purchase of on semiconductor. Another IDM, they brought in new management a couple of years ago that has a good track record of this. CEO Hussein Al Khoury, CFO Thad Trent, who just started selling fabs that were below average profit margin or maybe not being utilized and doubling down on those facilities they did have that are performing well. I don't know if current management can do this or if maybe Qorvo becomes a target of an activist investor, kind of like On Semi did. I don't know. If I was an activist investor, this is one that might be on my list where maybe you just need a shakeup and the company needs to start taking a hard look at expenses. Okay, so that's one way to look at this. The other thing too is this actually has happened with our Qualcomm investment. We've talked about what went wrong with Qualcomm this year, and the rebound in the core market in smartphones has just taken a lot longer than they expected. Now, Qorvo's CFO, Grant Brown, said this recently that on the earnings call that their results did exceed the midpoint of guidance despite a difficult macroeconomic environment. They're still trying to work down inventory of these connectivity chips. But even despite nice improvements, factory underutilization an issue. And what if the sequential rebound in connectivity chip sales continues to take longer than expected? Qualcomm has essentially pushed off a more robust rebound until calendar year 2024. If Qorvo kind of follows suit, this is most definitely an issue here where you have a situation of very little operating income for the next few quarters, or maybe even worse, maybe negative operating income, a continuation of the last two really horrific looking quarters. So I think that's absolutely a risk to take a look at here before making a purchase in Qorvo.
Qorvo stock is currently at around $94 a share. What is the valuation for Qorvo, Nick?
Yeah, so at 94 bucks a share as of this recording on September 25th, that means the company trades for 21 times trailing 12-month free cash flow. Price to earnings per share is meaningless because that's dipped into the red in recent quarters. So we're going to exclude trailing 12-month price to earnings, 21 times free cash flow. Looks like it could be cheap. On a forward basis, though, Wall Street analysts expect this thing to be all the way down to about 18, 19 times earnings for fiscal year 2024. So if the company makes a really robust rebound, you could take a look at this and say, this is a cheap stock. Maybe this is a good buy right here if you have that anticipation that the smartphone market takes off again in 2024.
Is Qorvo on our watch list then at this point?
Of course, it's on our watch list, but I think it's on our watch list because we just keep tabs on this connectivity chip market, analog chip market that is still very much tied to the hip with smartphone sales. That will probably change as the years go by. Automotive is going to be a huge growth driver. But at this point, I think Qorvo's underutilization of manufacturing plus the 37% sales to Apple is just too much risk for us. This is why we exited Skyworks Solutions. So we're not going to be taking a long-term position in Qorvo either for much the same reasons. If I had to choose between the two, Skyworks doesn't seem to have the same underutilization of manufacturing issues that Qorvo does. On Semi has also fixed that problem and is continuing to make good progress. We think both of those would be a better buy. That being said, if you're looking for a trade, maybe Qorvo is really cheap, and this is like a swing trade of some sort through 2024 if the market has this huge rebound. But ultimately, Qorvo is still going to need to fix those manufacturing problems. What we see is manufacturing issues.
Of course, we're not advocating for swing trading.
No, we're not. But if that's your style, if that's what you're looking for, uh, maybe this is one that fits your personal due diligence. But yeah, we're not telling anyone to do that. Okay, we're just talking about our own personal portfolio.
All right, that's a wrap on Qorvo and the connectivity chip market. It looks like 2024 is going to be a make or break year. So we'll see what happens. And stay tuned for our video coming up on 3 seemingly cheap chip companies that we are taking a look at. So stay tuned, hit the subscribe button, and we'll see you again soon at Chip Stock Investor.